start trading with as little as like $150 or $100 because
Mhm.
every lot every lot traded, as you said, every pip moves 10 cents only.
Which one do you trade?
So I trade I trade the mini lots.
Okay.
But you can always kind of move into a standard lot. 10 mini lots is becomes one standard lot, so it gives you the flexibility
So
to
what
trade
is
higher.
what is the margin requirement? I'm sure it's different for different
It's
pairs.
different, yeah, you're right. So it's different for different brokerages, and it's different for different pairs. Usually the USD majors, which is like USD JPY, Euro USD, Pound USD. These are the kind of pairs which are much more liquid, and the margin requirements are a little lower
Okay.
than some of the other pairs, like the miners, the yen pairs, and the other exotic pairs. But again, it depends on brokerage to brokerage. So what you should do is comparison shop always what kind of brokerage you're going to go with, so that they have the least amount of spreads.
I have
Uh,
some questions about that as well later on for
yeah.
you. Uh, we'll get into that detail.
So it's kind of different, but if you're putting it in a standardized way, usually the USD majors have lower margin requirements than some of the other pairs. But since I send out alerts for USD majors mostly, so
Okay. So this is just to kind of give take a little broader view of your performance. So I took the month of May as the performance month that I wanted to measure. So it looks like you trade a lot of Canadian dollar, when you are trading your alerts. Is there a
right.
particular reason about that?
USD CAD, yeah. Well, the thing is, it for once it's my favorite pair. And then the time frame that I usually trade is the North American session when the stock market is open as well, because I'm looking at that as well. So, and I know a lot more about USD CAD than I know about the other pairs. Not that I don't trade other pairs, I do.
So, but that's your comfort zone, you would say.
My comfort zone, since I do follow, living in Canada, I do follow American and Canadian economies and the currencies much more closely than any of the other
It looks like,
currencies.
but 60% of your profits came from that pair, right?
I'm not surprised, yeah, because I do kind of trade a lot more in USD CAD, and then it gives me a lot more opportunity as well during the daytime, because it moves quite a bit in both directions. So you get multiple opportunities to get into a trade. So that's one of the reasons too that I like it, like to trade it much
So
more.
just to kind of give our viewers a little idea about how these performance would translate into different profitability scenarios, I would say. So if you were trading mini lots, which have different margin requirements, definitely. So I've given some examples here where if you were to trade 5 mini lots, and Faisal, just for an example, just for argument's sake, what is the margin requirement for Canadian, if you want to trade US CAD?
For a mini lot, the margin requirement is about $220 for my brokerage.
Okay, and so let's say that's an average. I would say, let's say $250. Just to
most of the pairs, as I said, USD majors fall in that range, like give or take.
So yeah, let's say $250 just to be on the safe side. So that means for one lot, you would have to have $250 of margin
for one mini lot. Yeah.
Right. So that means 5 mini lots, you would need around $1,250.
Correct.
Roughly. So that's the margin requirement. Okay, that makes sense. Okay, so for standard lot, you just times it by 10, basically.
You just times it by 10, and for mini lot, you just divide it by 10.
Okay, that's fine. So folks, yeah, so what it means is that if you had traded 5 mini lots, basically on every trade alert that he sent out, you would have $1,250 to trade that that particular alert every time, put up that margin for trade, your profit would have been close to $2,000. So that's what it is.
So just to add on to your to explanation, in simpler terms, let's say if you have $2,500 worth of money in your account, in your trading account, if you're trading 5 mini lots at a point in time, so what the brokerage would do is put aside those $1,250, so you would have $1,250 left to make any other trade if you want to do that. So that's kind of margin requirement. That's what margin requirement means.
Okay, makes sense. And is there any fees, transaction costs involved when you're trading?
Again, it's variable with different brokerages. Some brokerages just charge you a commission. Some just charge you spreads, and some charge a mix and match of both.
Okay.
But again,
who is your broker?
My broker is FXCM.
FXCM. I think that they're pretty. They're big. I mean,
they're pretty big players in the brokerage business. Yeah, and they have offices all over the world. So
okay.
And they're nice too. They have some good features as well. So they charge me a combination of commission plus spread.
Okay.
So for a USD major, it's somewhere between 1 pip to 2 pip. I mean, with the commission plus the spread.
Okay, that's good.
Yeah.
So let's dive into an example of a trade that you sent out. So I picked 3 trades from your past history in the month of May. So this one is a Aussie. Australian dollar, basically. You went short on. So walk us through your thought process of opening this trade and why you entered the trade at what level, and just to kind of be clear, this is a 5-minute chart of Australian dollar.
Right.
So each bar you see is a 5-minute chart. So yeah, please go ahead.
Sorry. Yeah. So this was a day when I don't remember exactly, but the U.S. markets were down big time. And usually what happens is when there's a risk of sentiment in the markets, in the equity markets, the Forex peers act accordingly as well. So the riskier the currency, if the stock market is down, if the U.S. markets close down, there's always a chance of a follow-through action in the Asian markets. So what happened was, I think Dow was down like 300-400 points or something like that on some yields. I don't remember now what it was, and it was like 29. So it broke if I would have that hourly chart, I would have shown you, but it had broken the support level in the hourly chart, and I got in just before like 5 p.m. when they were switching over from the North American session to the Asian session. And if you can see that the support had now become the resistance. Again, if it was an hourly chart, it would probably be clearer. But even in the 5-minute chart, you can see that it bounced against that resistance and then it turned lower, and that's where I got in.
So and I think this trade was open for close to about 2 hours. Yeah, just like your average. Yeah.
So it was just before the North American session was transitioning into the Asian session. It was opened at 4:58 p.m. It's just when the Forex markets are switching over.
Typically speaking, you just traded it because it broke the hourly support.
The hourly support level, and since the follow through from the equities was pretty much guaranteed that the Asian sessions there was going to be risk averse initially for sure, and it was going to put pressure on the.
So you do take into account those things when you are trading.
Yes, of course. Yeah, you have to look at some of the fundamentals as well. I mean, primarily it's obviously a technical chart, but I do look into what went on with the market, especially with a pair like Aussie, which goes up and down with how the equities perform, basically. So
Okay.
it's called the risk pair, so it does well with.
So here is your another trade, your favorite Canadian.
Yeah.
Can you tell us a little bit about what was the thought process here when you entered this trade? Again, this is a 5-minute chart. It looks like.
Again, this is a 5-minute chart. So since the total trade is about 25 pips, it doesn't really it didn't make sense to put up an hourly chart. That it would be really small, so I would have been able to explain it better. So this was a day when the U.S. steel tariffs were about to go in, and it was putting pressure on the USD CAD. So CAD was basically falling. So as soon as the news came out that they were going to be announced later in the day, it broke through the resistance in the hourly. So even in the 5-minute chart, you can see when it kind of broke through that resistance and then it retraced a little bit, I got in. And
okay. Yep.
then after a 25 move.
So this 25 pip, what does that mean? Is that a profit per mini lot?
So that depends on what lot you're playing. I mean, if you were playing a standard lot, that's $10 per pip. That would be $250 minus whatever the cost of your brokerage.
But let's say you're doing mini lot, because most of the people do go with mini lots. Average person does not have that much kind of capital.
That would be $25.
So $25. So that means for 5 mini lots, that would have translated into $125. Okay. So $125. Okay. So yeah, $125.
Standard lot is 10 mini lots. So you're talking about 5 mini lots. So that would be 5 into 25.
Okay. So the margin for the 5 mini lots in this case would have been close to $1,250 again.
Close to $1,250. On FXCM, it's $1,100, but average, yeah.
So that's $1,250, and then you would have profited $250, correct?
Yeah. On the standard.
Sorry,
on 5 mini lots, it will be $125.
So that's about 10%.
Yeah. So you have to keep in mind that the margin requirement has nothing to do with what money you make or lose. Okay. It's just a requirement that you need to put it aside.
Okay. I was just trying to put things in perspective in case somebody wants to, mimic that performance. If it would have helped them to understand what sort of margin requirement at least they would need in their account. Right. Of course, the profitability would be different because that's how it works. Okay, makes sense. Let's go to this last one, which is a Euro USD pair. Again, and is this because this was sort of a resistance here?
This was so this was again a case of a support turned resistance. So in the hourly, the euro broke the support, and then it kind of consolidated around that resistance, which was originally support. And once it showed me that long candle that it was getting rejected at that resistance level, I got in.
Okay.
Then got out at the next support level, which it was showing me on the hourly chart.
Okay. I think we just got one question by Alex, and we'll get into more questions, but he's asking, is there any way to make actual video of the trade and share with us, Mr. Khan? So is there a way you can do that while you're trading? Maybe make some video just so that they have some understanding of how it's doing. I think you have Snagit, and there is an option of actually recording a video.
I mean, are they asking that I make a video as I'm trading?
I mean, again, I'm not saying what they mean is that you do it every time, but maybe.
No, I get it. They want to see the actual trade, how it works.
Right, just so that they kind of look at how you are executing the trade, what the chart looks like, and maybe post it on YouTube for them to kind of see as well.
Sure.
Just he's saying step by step, just so that so maybe next time when you're doing that, maybe create a video, just record it, and so that we can see from the time you execute or enter a trade to the time you get out, and just we can post it on YouTube for people to refer to. I think that will really help them.
I guess we could do that.
Okay.
It's not a problem.
We'll take that note, chat, Alex. Awesome. Maybe a live webinar. Sure. Yeah, we can think about that too. But sure, I think that those things will definitely help. So awesome.
Yeah, I guess some people have live trading sessions as well, but I don't know how much work is that. But we can surely make a video and.
Okay. Awesome. Great. So just some questions that came earlier in the email. So they were like, you trade Canadian more than any other pair. Why is that? I think you kind of answered that at the beginning when you said that's the pair.
I know a lot more about the economics of USD and CADs living here. So that's the reason. It gives me a lot more opportunities during the daytime when I'm actively trading stocks and other securities as well. So that's the other one. And also, especially for my brokerage, it gives me the lowest margin requirement.
Okay.
So
all right. If it works for you, it works for you. I mean, that's all we care. So Forex moves fast, and sometimes you have to average down your price. Do you recommend that? Do you do it yourself? Is there any golden rule around it? So
not per se a golden rule, but yeah, you can. I do average down sometimes, not all the time. But again, it depends on what's your risk profile, how much of money do you have on hand, what's the size of your brokerage account. You always have to take into account what kind of money you want to risk on a trade. So if you have a smallish account, or if you're just beginning to trade, I wouldn't recommend that. For someone experienced who knows how averaging works and how much of a risk is associated with it, and I do that.
I mean, I understand there is sometimes slippage. Where you send out an alert and somebody who's opening the alert and trying to go into their account and execute that, the price might have moved up, or actually, they might even get a better fill.
Better fit. So
there is always some slippage.
I think there was a question from one of our users in the email today as well, that he was saying that the limit order didn't get filled, and I think it was one of the trades that I sent.
And that's the nature of this market.
By the time I sent it out, it had already moved. So you can make a conscious decision at that time if you want to get into that, if you think it's not comfortable for you. So you don't really have to force yourself to get that trade.
So another question was, how is Forex market different than the stock market in terms of trading experience, choppiness, all that stuff? If somebody... I mean, I know you trade both of them. Any particular difference in both that you think people
Forex market is a much bigger market than all of the stock markets combined. So you have like $5.5 trillion of currency exchanging hands every single day. So it's much more liquid. It is much more volatile than stocks as well. Again, it depends on what pairs you are trading, but generally speaking, it's a little more volatile than stocks. There are choppy days like stocks, but they're fewer and far in between. But you get enough opportunities, much more opportunities in Forex.
One of the major differences, I believe, is it's a 24-hour.
But good that you reminded me. I actually almost forgot. So that's the biggest difference is that it kind of worked at 24/5. So you just switch from one market to another. It never closes till Friday evening. So it starts on Sunday night when Australia opens, and then it just keeps switching from one market to another. So from Asian market to European, they overlap in between, and then from European to North American session, and then they overlap in between the hours of like 8:30 to 11:30.
Okay.
England closes, and then
Yeah, because we always sometimes get your alerts even in the market hours where the stock market is closed. So sometimes people wonder how it's taken.
Yeah, that's my second favorite pair, Aussie. I know I haven't been trading it too regularly, but I am probably going to start doing that.
Okay.
Since the Aussie pair and the New Zealand pair, they usually move much more in the Asian session of
And
markets are open.
so your average holding time is a couple of hours. How do you recommend that somebody with a full-time job who cannot be in front of the computer all the time or most of the time, is there something that you recommend for them who's in that sort of a situation? Can they still take your alerts and be okay? I know most of the people right now these days trade from their cell phones anyway. So yes, you can access it, but again, I'll let you answer that question.
Yeah, so what happens is, as you said, most of my trades are like a couple of hours to 3 hours, and that's pretty much the holding time, and in which it gets closed out in profit or loss. So obviously, by the time, if you're too late to pick those up, it will probably be closed and you wouldn't be able to trade it. But what I can tell you is that most of my trades are in the earlier hours of the North American session, which is like between 9 o'clock or 8:30 to 12 o'clock.
Okay.
So if that's the time frame that suits you and you can follow the page, you can do that. But having said that, I'm also planning to trade the Aussie pairs and some of the other Asian active pairs going forward as well. So if you can't trade in the morning, you can always come back in the evening and you can trade those pairs with me.
Okay. And there's another question came. How long after an alert is given is the order valid for?
So usually I, put it on the alert how long it's going to be valid for. So.
But in your case, usually how long it is valid for?
Usually I give out about anywhere between 15 minutes to an hour, but sometimes it moves. It can move very quickly, so it might even be closed by the time you get to that. But that's the nature of Forex. You can't really predict if they're going to move right away, or maybe it's going to be a couple of hours before you get to that.
And then the follow-up question related to that is, I guess that's more for me, is if I don't get a fill and don't get in the trade, do I still pay a credit? I believe the answer is yes, you do, because again, this is Forex. For example, if the alert is to enter a certain trade at 1.25, just like by the time you open the alert, go into your account, it could be at 1.255, it could be 1.245. So it can go either way. As long as you are around a certain number of that alert, that particular price range, you should be able to get in. So
just wanted to add something, Yasser, here. Even when I do close the trade, as you can see in the window that's right there, I usually do give out some information regarding the pair moving forward. So even if I close it, I do tell people that that this is the new resistance or support, and you can scalp or you can still trade it as long as this level holds.
Okay.
So they can still continue to, as you can say, it's an added bonus that I give out even after closing the trade. So they can still trade it if they have been able to trade it.
Another question from Alex. He's asking that he's first of all saying that you read the charts very well and all that, and you're very informative. That's good. He's saying, do you have any interest or read charts for commodity markets like oil, timber, stuff like that?
Oil, yes, I read a lot, and that's because the Canadian currency, the loonie, has a very strong correlation with oil.
Okay.
So if the oil is going down, this pair tends to move in the opposite direction,
Okay.
and vice versa. So I do keep an eye on oil a lot because it has a very strong correlation with the USD CAD. But again, reading charts is my thing anyways. For
So
trading.
you can technically read any chart for that.
Yeah,
right?
for that matter, that's I can read any chart. So
Okay.
that's
Okay.
not a problem.
Maybe, yeah, I think maybe a weekly you can put some analysis on commodities as well. Few of the times, I think there are people who like your analysis, the way you write on charts and put your thoughts on it. It'll just help them, I think, and definitely maybe at some point in time we can introduce commodity trading on Tradealike app as well, because there's a huge market in about there as well. There's a lot of people who are commodity traders as well, so that definitely be helpful to them. I think few recommendations for Forex traders. I think you wanted me to put these in here, so I mean, if you want to just go over them one by one, that would be nice.
So the biggest difference or the biggest risk factor trading Forex is the leverage. Since most of you know that for stocks trading, it's most of your brokerages would give you a leverage of like 1 to 3 or 1 to 4. So if you have $10,000 worth of money, you can trade for $30,000. With Forex, it's much higher. So it's like 1 to 50 going upwards to like 1 to 400, 1 to 200. So, but that does create another problem for you, in the sense that you have to manage your trades very carefully, because the risk of losing too much, you can make too much, but then again, with that kind of leverage, you can lose a lot too. So you've got to be careful with the risk you're taking.
Yeah, I think controlling emotions is definitely a big part of
that goes for any trading, be it stocks, be it Forex. If you are a technical trader, you have to follow technical levels to the script.
So you said lower commissions for the broker. So what does FXCM charge you? I mean, do you know what it is?
For like USD, for the USD major pairs, they charge me like half of it, like 0.3 to 0.5.
Okay.
So that's pretty decent, and the spread is about the same, so from 0.5 to 0.8. So most of the USD majors cost me about 1.5 to 1.8 pips per trade in commission plus the spread.
Okay. And you have mentioned here to not trade around these data releases. How do you keep track of all
that? So I kind of put up an economic calendar every day on my stock tweets and Twitter. For all the other followers, for my followers, the kind of I have to look through them anyways. So every day I know that what's the most important data that's going to affect a certain pair. So keep an eye on that. So since I have I just do 7, 8 major pairs, so I pretty much know which is going to be which is.
So there's another. I think somebody asking that today was an FOMC decision. So, but you kind of traded today. Is there a particular reason you did that? I mean, is that not classified as a news event?
Yes. So yeah, good question. I mean, I didn't trade right away. It was like so. If a decision, if a fundamental decision comes in and it takes out a technical level, then I'm happy to trade that. But if it's just choppy and moving up and down, I would stay away from that. But usually it's like an hour following a data release, things start to settle down, and then you get a clearer picture.
Okay.
I did trade USD CAD today, since it had taken the resistance level after a follow through of the FOMC decision, but I didn't hold it on for too long. So as soon as it hit the next technical level, I just came out, and it didn't
Okay.
take long. It was like nearly 10 minutes. So
Okay. Okay. Makes sense. Uh, Avoid over trading. What does that mean? For what? I mean, I think it just depends on different people how they define over trading. But is there a general rule that you follow?
yeah, so what happens is sometimes, just like stocks, forex pairs move in waves as well and patterns. And there are days when a certain pair would just keep on going, moving up or keep on moving down for some reason, and it tempts you to kind of keep on trading every time it reaches to a certain level. It might work on a few days, but it could just reverse to
Yeah.
another level.
I
And
think I personally myself have been, kind of victim of that as well, over trading.
I've done, I did that many a
So
times. As
try to be as
yeah,
disciplined as possible. I've sometimes even put these little sticky notes around my monitor saying, do not overtrade, do not do such things, do not go get into a position size which is larger than my comfort zone, where I would feel uncomfortable leaving my computer screen. So I don't want to. So I try to avoid those situations, and one way to do that is to just be disciplined. I cannot stress that enough, right?
oh yeah, that's the biggest thing. You always discipline is one thing that that just goes with trading. You got to be disciplined, otherwise you're going to burn yourself out at one point or the other.
Alex is saying, don't you feel that you're not working when you're not trading?
Yes, I do, and but thankfully I've got myself busy with some other things that has taken my mind off this over trading thing, like blogging a lot and like putting up nice posts for all my followers and stock with and Twitter. So that kind of keeps me occupied post trading hours. So it keeps me away from over trading. But yes, I've been there, done that, and I don't recommend it to you at all because that's not good.
Awesome. I guess if there's anything else that anybody else wants to ask, now's a good time. I think we have taken enough 40 minutes of your time, Faisal.
No
You
worries.
might have lost a trade or two in that time, I guess.
No, it's fine now. It's going to slow down. The Asian session is going to roll in, so it's nice and moving around. So the stock market has closed, so it's going to be nice.
Okay.
But I do have. I'm pretty active on, as I said before, on StockTwits as TradeNet, and pretty active on Twitter as well under the same alias, and do write blogs as well. I do write a weekly blog on stocks and forex and cryptos.
Sure. I think when we send out a follow-up note, I will include that in that distribution, so that everybody has had a chance to look at it. But yeah, I think it was nice to know how you're thinking when you are taking the trade, and everybody knows now that it's only for a few hours, so they can kind of work around it. If they need to be in a trade, they know what to expect. Of course, I think I'm just thinking that people might be inclined to take more of your Canadian trades, since that's your strong area, which is okay. Yeah, I think that's great. And if anybody wants any follow-up questions or any help in finding out where to go and open the brokerage account, or any questions related to forex, please, you can reach out to me, or just ask Faisal as well. I will share his email with you over the follow-up note that I send out to all the participants here for today. So, and also look for the free credits into your account by tomorrow morning. So yeah, thank you all for joining, and I'm glad that you were all able to make it today. So thank you. Take care, guys.
Thank you, guys.
Thank you, first. Awesome. Bye-bye.